Today, we're going to break down the anatomy of what looks like a perfect crypto trap. We are talking about the MMT token, a project that saw some people make millions while so many others lost everything, all in the span of just 24 hours. It's an incredible story of greed, hype, and a truly spectacular collapse.
So you have to ask, how does this even happen, right? How can a digital asset just multiply its value by 10 only to completely disappear overnight? Well, this wasn't just a stroke of bad luck. It was a story of hype, leverage, and what seems to be a perfectly executed market manipulation. Let's really dig into how they pulled this off.
I mean, just look at these numbers. They tell a really brutal story. At its absolute peak, MMT was trading for $10.50, and then just 24 hours later, it was worth less than $1. That is not a market correction, folks. That's a complete demolition. So to really understand the wreckage, we have to go back and look at the blueprint.
It all began with setting the perfect trap. You see, the manipulators didn't just need a bunch of money. They needed the perfect market conditions to lure in their targets right from day one.
Okay, so here's the first piece of the puzzle, the psychology. MMT launched and almost immediately started trading below its initial price. Now, for most traders out there, that's a huge red flag. It screams weakness, and it practically dares them to bet that the price is going to fall even further. And that's exactly what happened. A whole lot of traders started short selling, basically betting on the token's failure. They were borrowing MMT to sell it, planning to just buy it back cheaper later for a profit. But what they didn't know was that they were becoming the fuel for the massive fire that was about to be lit. The second key ingredient was low liquidity. Check this out, only about 20% of the total MMT supply was actually available for trading. Now, in a market that thin, it really doesn't take that much money to cause huge price swings. A single large buy order can move the needle in a massive way, which, as you'll see, was the core of their plan.
So, with the trap perfectly set, it was time to spring it. This next phase is where things get crazy, where the manipulators turned all those negative bets into pure rocket fuel for an unbelievable price surge.
And just look how fast this all went down. On day one, they baited the trap, drawing in all those short sellers. Then, with almost surgical precision on day two, the attack began. A flood of massive buy orders slammed the market, and the price didn't just climb, it absolutely ignited.
The price hit an incredible $10.50. And let's be clear, this wasn't driven by some new feature or good news. This price was completely manufactured by a powerful market weapon known as a short squeeze.
So how exactly does a short squeeze work? Well, first, you have these large players, we call them whales, and they start buying like crazy to pump the price up. As it goes higher and higher, the short sellers are losing a ton of money, and their positions get automatically closed by the exchange. This forces them to buy the token back at a high price, which, you guessed it, creates even more buying pressure that sends the price parabolic. It is a brutal automated chain reaction. And this, right here, is what made the whole trap so believable. MMT looked totally legit. It was a real DeFi project with a lot of money already invested in it. It had a trendy new economic model, and it was backed by huge names like Coinbase Ventures. All of this created this powerful sense of credibility and just fueled a massive wave of FOMO, the fear of missing out.
But, a rocket that's fueled by pure manipulation can't stay in orbit forever. After that incredible squeeze came the inevitable collapse, and it was every bit as fast and as violent as the ride up.
And right here, this is the smoking gun. On-chain data shows a wallet, one that's linked to the project's own insiders, moving 38 million MMT tokens onto an exchange, right at the peak of the frenzy. Now, there's really only one reason you do that. You're getting ready to sell.
And at that peak price, those 38 million tokens were worth a staggering $45 million. Think about that. The very same insiders who likely engineered the squeeze against the short sellers were now getting ready to dump their bags on all the retail investors who had piled in at the top, driven by pure FOMO. The impact was, well, it was catastrophic. A sell order that massive from the project's own team acted like a tsunami, just wiping out all the buying pressure. The price didn't just fall, it absolutely plummeted, and all market confidence just evaporated in an instant.
And just like the squeeze created a cascade on the way up, the dump created one on the way down. First, the insider sale caused total panic. Then, All the buyers who were using leverage got liquidated, which created even more forced selling. And finally, the market makers, the big players who provide stability, they just packed up and left. With no one left to buy, the floor completely fell out of the market.
So, when you put all of these pieces together, you see the entire playbook. You see the full manipulation. It was a perfect 3-act tragedy for the market.
The playbook is crystal clear. Step 1 was the setup. Create weakness to bait the short sellers. Step 2 was the pump. Use a short squeeze to liquidate those sellers and create a massive frenzy. And step 3, the final act, was the dump. Cash out at the absolute top, leaving everybody else holding the bag. It's a classic, brutal, and frankly, a frighteningly effective strategy.
And this all brings us to the most important question, doesn't it? The MMT story is a huge cautionary tale, but let's be real, it's not unique. It just exposes the massive risks in markets that are driven by pure hype. So the next time you see some asset just going vertical, you have to stop and ask yourself, is this a real opportunity or am I just the fuel for someone else's rocket?